Okay, Tuesday morning, December 13, 2016. I made two videos this last night. My classic humor, but mostly I went over Treasury ETNs, so like TLT and TBT. For bond players, play the odds on the way up. 151, 153, 155. There's an area, we'll go over at about 153 and a half. Basically, I'm looking for a short cover and rally. I mentioned that I thought that after FOMC that the lows in the bonds would probably hold. This is, in a perfect world, this is what I'm looking for. That the bond lows hold, which would be the high in interest rates, and then we over the spring and summer during the housing season chip away at the higher rates and try and get the mortgages back under 4%. In the perfect world, what I'm looking for is tree shaking, which is basically reversals of persistent trends. So bonds would bounce higher, gold would go higher, the dollar would come down. Equities, 20 to 80 on the upside for the S&P. If it loses Monday's low, 22, we'll say 45, then the target then back is down to 2200. We'll go through that real quick. This is called monkey bars on Thinkorswim. TD, what it is basically it's market profile. I mentioned that in a video over the weekend. You can get the handbook for free at the CME, and basically what it is you have your bars, okay? And inside the bars you have the volume, and this tells you where the volume, I call it a happy place. So right here on the Australian dollar, this area would be the happy place. Buyers and sellers are most happy at this price, and now we're trading above it, and looks like it was used as support. So right now the Australian dollar is making somewhat of a triangle here, which is a continuation pattern, would continue on. The red lines are resistant lines. I have both daily here. These are pivots, okay? I have both daily and weekly on here, okay? And the mauve lines are the pivots. So if price closes above the pivots, the trend continues until it doesn't. And then down here on the green ones, these are support lines. What it is it's just the simple mathematical of high-low close of the price. And so basically you go from a daily to both daily and a weekly, that price is above it. The Australian dollar and the New Zealand dollar, commodity related. We saw some move up in U.S. steel prices. Coal prices are basically still depressed. To me, I'm looking that this is more of a bounce. I don't see it as a persistent trend. As you can see, this would be about halfway back. And then these are linear regression lines. It basically takes the prices that I have on the screen here and encompasses them. And basically they just work as resistance here. Resistance, poked through it, came back through, found pivot, found the happy place, and swinging, okay? For me, I'd be looking for areas to short because I believe that the dollar will continue higher, but we're definitely going to shake the tree here, and we're already beginning to see it already. British pound, we're in back around the 122 area. I think it'll continue down in here. There was a fat volume bar. Still going up in here. Here's 130 to 133 area I kept talking about. I'm stretching it now a little bit higher to 135 area on here. The happy place up in here is 132.50. The shadow areas where 70% of the trading is happening. So basically the British pound now is trading below where the majority of trading has been happening. Okay, Canadian dollar. Okay, the Canadian dollar's been moving up because of oil prices. I have to change this a little bit here. It's only by tens. We're back at a happy place here. This is on a daily. The yellow line is the money flow. So you can see as money goes in, prices go higher, money comes out, price comes down. What I'm looking for is divergences in the money flow, like here where a lot of money went in, but they could only muster, here's an upper range of prices, and it could only, more money went in, but they only could muster this much, which basically tells me that the participants are giddy, okay? So that would be the divergence that I'm looking for. It's coming up, and it's about 20 points shy of its happy place. Okay, now this would go along with oil. There is more room to run on the money on here. I was looking for 54 on oil. If 54 is cleared, then 62, but yesterday's trading where it opened at the high and traded down, I'm going to say that oil for right now, excuse me, the cap on 54. I have to treat it as a breakout and a retest for right now, but yesterday's action from 54, I'm assuming, okay, in a perfect world, that all the OPEC people, all the producers hedged as far forward as they can go. You can go way out there in oil, 2030s. I think maybe you can go way out the decades kind of thing, okay, in some of these commodities that they hedged all this stuff. They're good to go until the end of this business cycle, into the recession. And prices are locked in. You know, if they can lock in as much as they can for the next 3 years, they're good to go. They can pump as much as they want now, right? Because they're hedged. That's how the markets are supposed to work. You pull it out of the ground, you sell the futures contract, you're locked in your price. The euro, basically the same thing. Commitment of traders report, just like the British pound, but not as much on the euro. Lots of shorts in here. You can see the money flow basically came out of it. More money came out, but prices didn't go lower, so you're getting a divergence. We're banging up here against pivot points. It's above its happy place, okay? The swing on here would probably be back up into this area again. The upper end is 111, but I would say 109 for right now on the swing. Japanese yen, basically the same thing. I posted something last night about Japanese yen 300 points higher and 500 points lower. The thing with the yen, like I talked about in the video, is that we know that a whole bunch of new shorts came in this area. And basically now you have a situation where prices are coming back. So we can have a hard swing on here, okay? That's how it goes. If the trend, if this is the trend, logically you go with the trend, you short this thing. Well, all of a sudden it comes back, and else you have to lock in that, you hit the sell all button. And that's what I'm expecting to go on. Is we get it's kind of like the butterfly effect. One market changes, then they hit their portfolio, sell it all button, and then we end up after the tree shaking having to put positions back on. Here's the oil, Brent. As you can see here, they're tried to make a move up this morning, and money's coming out of it. So you're getting a divergence on there. You're getting people willing to sell into the rally now to get out of it, because they realized yesterday, just like with me, I had the two videos I made, it's my humor, tongue in cheek. It's evening viewing basically, but because you'll have time on some of this stuff for Wednesday. But basically what it is I go over how people felt about how oil took off, and that it was a lock, and it sold all the way down. But yet the Russell can do the exact same thing, go screaming, and everybody wants to short it. Okay, so the thing there is I'm trying to get you to focus on, when you realize that a position's going wrong against you, that feeling when your body says something to you, your mind has to realize I got to click it. And I know you want to hold on, you want to have hope or whatever. The easiest thing is just to reverse. The first time you say uh-oh, or it's not going right, just reverse. I mean, what will happen? It's kind of like if you're out of the money 20 pips, what are you going to wait for 30? Well, if you reverse and it goes 30, well, you have half of it back by 10, and you might have something. The toughest thing in trading is what's between your ears. I mean, you look at this, it's pointing up, so your trend is up until it's not anymore. And the pivots help out. As long as it stays above the pivot, the price is still higher. We're bouncing around in this area. If Brent loses, we'll say 55. Okay. It'll come down to 54. There's a median line here, the center line here. And if not, then it'll come down again to 49. That's how I'm leaning overall, is that oil prices are going to come back into the sideways band, and they're going to just pump. They're hedged and they're just going to pump. Cocoa, I have to look at this as a bear market rally. It was horrific if you had to live through Friday, but you got the reversal on Monday. You could be making somewhat of a smaller inverted head and shoulders here. Go back and look at monthly charts on this one here. I wonder if I'll have, do I have 20 years in monthly, where we have daily? 20 years monthly. Okay. We're coming off of some, you go back even further, go to that mrci.com and download the free PDFs on the commodities, and you'll see where we're at in relationship to in the past with cocoa. Crude oil, basically the same thing. You had the run up, you had the money comes flowing in there, and price just comes down. So, you had people who realized, hold on a second, maybe we're going to fill the gap. So we did the whole gap thing, and now we're moving up. But we're not, the money is coming in, but not as high. So I expect this thing to probably stall out maybe at 54. We got to 54 and a half, but I have to treat it, just like before, when we talked about a week ago or whatever, where prices came up on weaker, kind of like a weaker structure. I still had to lean towards the bulls because the trend has been pointing up since 42. But now we're getting at a thing where I hit 54, the hard selling yesterday. I have to lean that this isn't going to hold, and we're going to come back down. Here's 51. So I said 52, but the happy place is around 51. Okay. Dollar index, we marched up. Basically, we broke out down here. We marched up, trading sideways, a swing higher. Didn't seem to work. We pulled back. Money's coming out of it. Basically, the pivots, 100.70, we'll say. This is resistance 101.25, I'll say for today. I have a travel day today, so I won't be in front of the computer most of the day, but I will tonight. And then tomorrow we have FOMC. My thing, like I said, is we're going to shake the tree, okay? Last year at this time, equity prices were coming down. We raised it for the first time, and stock prices just didn't work out so swell in January and February. So here we are again. Okay, so the upper end here is about 2280 on the S&P. I personally would kind of stand aside. I'm already standing aside anyway. But what we have, like pointed out in the video, is we broke out. There's a lot of hope in those bars. The S&P, the bars that we had thin bars through October, November, and also the bars just got thicker on the volume just recently. So there's a lot of hope up here. So if S&P loses down here 2245, I would say it would come back down to 2200. Okay, and then of course the next level, then we're talking. Let's see here. There's a level here, 2182, 80 area, and then 7. This is upper 60s, and then the lower linear regression here. You have a situation where it comes down, bounces, and then it comes back. And we basically now leave a whole bunch of hope up above. I talked about that in one of the videos about how you could be giddy and think oil was a lock yesterday. And it's the same type of psychology in with the fat bars. There's a lot of hope in the secondary swing here. All right, you can see the money coming in here. We get up to here, and all of a sudden things begin to falter. I personally, I kind of want to stand aside, but I don't want to short it. The deal is when you're at the end of trends kind of thing, it is crazy insane. That's where they lose their mind. Like I said, I'm looking at it as we're raising interest rates to put the economy into the ground, right? So it's one of these that, you know, in my eyes, I'm looking for the end of a 6-year run. That's what I'm looking for. You also know that I expect the stock market to double from here. Okay. But my thing is I'd rather go somewhere else, you know, kind of deal. You're in it. That's fine. You hang on to it until, you know, it doesn't change in a whim. I mean, the 87 crash, the market fell 20% before it fell 25 more on top of it. There is time. Okay. My thing is I'm going after the psychology in the market right now. There's a lot of hope in this, but it still has to pan out. China fell 5%. Part of it was their meddling, but Trump also said something. I mean, could you imagine something being said by accident and our U.S. market falls 5%? That's what, 110 S&Ps? So that's what I worry about going forward too. What do we have here? I also have the little dots on here, the SAR ... and we're pressed up against that. So, and then I'll also use this median line as a trend that if this is lost, then I'd expect it to come back down to 2100 area here. It's at 2104. 2113. So we're back into this meaty area. I probably would expect some sort of bounce and then have it come all the way back and retest the breakout down in this area here, this lower median line. Kind of like this. If in a perfect, we get to 2180, we break back below this median line, we come down into this area, which would be this line, we bounce up, and then we come back down into this area here, which is 2170. So 2280, 2240 is lost, then I'd expect 2200, you know, 2200 to 2213 area into this kind of meaty area to retest a bounce, and then we'll see. We'll know more by Thursday, won't we? Okay. Gold, like I said, it's been in a persistent trend. One thing that's been kind of confusing is that gold continues to go lower, but the equities are holding up. I talked in the past about giving gold a couple of years, like between 1985 and 1987, gold actually went up in a deflationary period. We had bumper crops in 1987, okay, and then 1988 we had a drought. And real estate peaked in 1987, 88, things kind of slowed down. 89, we had the mini crash October 13th, and then we had Gulf War I, and then we kind of paused for a little while. One-term president, that's what we had, hint, hint, hint. Okay, gold, money flows coming out of it. We got somewhat of a small bear flag here. Wouldn't it be interesting if gold took out 70, it's quietly moving higher, right? Okay, from off the low. I'm not saying we're gonna go to 1500 on this thing, but the deal is that I think it was 1190 is a happy place. So it's one of these. Before you know it, here we are. I mean, if the persistent dollar has been affecting gold, if the dollar pulls back, you would expect gold to move higher. In the olden days, if oil goes higher, gold would have gone higher. So like I said, I try not to put too many variables on a parlay. You know, this has to happen before this happens. This is on its own. Gold's on its own. For those of you, you know, that need to be bailed out of a position or something, if you get the swing on the thing, just, you know, basically move your stops up. And it's one of those where I don't expect these to be one-day reversals. I expect them to move, to wiggle a little bit more, right? Just like I talked about the bonds, bonds could actually trade sideways to higher for the next 2 quarters, okay? In a perfect world, okay? But the market is very stubborn here, coming off of ZIRP. We're not, you know, we're trying to get back to normal. We'll say 6% interest rates because that's what par is on the bonds, okay? That would be 100, and we're at 149 and change. So we still have a lot of room to run to get back to quote unquote normal. So, you know, in the 1930s, after the Great Depression, we had muted growth. We have kind of muted growth. We have our largest segment, the baby boomers. They're still in the Obviously, retirement kind of got lost in their education. They're in their late 60s kind of thing, working type of deal, 70s. I'm not going to go into it, but obviously, the economy would be better if we had national health care, right? We wouldn't have people working for a supplement kind of thing. That I'm not saying anything. Trust me on this one. If we only spend 3% on education, it's not going to take much, and it benefits everybody. We're a mixed economy. We're more socialist than you think. It's socialism. It's kind of like if the government ran General Motors, hint, AAG. But it's here nor there. But just to kind of attempt to do the right thing. Then we can move on, right? If everybody has health insurance and a chicken in the pot and butter and bullets and whatever, hey, it's a happy place. All right. Euro dollars. The bodies have been moving into euro dollars here. This is money flow here. Technically, euro dollars are supposed to go the other way with interest rates. This is like T-bills of European variety. So this gets me curious that why are we parking our money in overnight paper? When you looked at the money flow on some of the ES on a longer term, where am I at here? There's a weekly. Weekly, it's okay. Prices are higher, but the money flow kind of stalled. Here we are at the weekly. The deal is that the money hasn't been going in this right here. Here we go on a daily. All right. Money comes up, price goes down, money comes in, price goes up, everything. And then all of a sudden there's a shift in August. Okay. All right. There's a shift in August. The prices come down. We get basically a springboard. Okay. Now we moved up. I just saw it in the weekly. It was tagging up in here. We're not getting it. In theory, the money's not going in there because they're doubting this, which means that unless you reverse it, it can continue to quietly go higher and quote unquote substantially higher because the money would have to chase after this thing. You basically have non-believers. But my deal is that you just saw that the euro dollars where they've been basically parking their money in cash. So you have a lot of people who maybe in the know who they don't believe this here. Plus also remember, we're talking, this has been going on, the market's been going on, well, forever, but 2009. So we're long in this one. I'm looking for something to correct the move that we've had up. And the hiding in euro dollars here has me kind of a little bit worried here. Copper price is basically sideways. Here's the happy place at 263. I prefer to stand aside. I talked about 160, but the flip side is I'm not sure what exactly is going on in here. You're getting copper. We're like at stage 4 and all of this. I'm treating all of these bounces here like this as a wave 4 for the Elliott waivers, and then we roll over. And all the commodities in the next recession basically bottom out. I'll say $20 oil and $1.60 copper and whatever $800, $850 gold type of thing. The extreme $2 corn. That kind of deal. A deflationary. That type of thing. I go back a little bit further, so my numbers are a little bit deeper. But that's what I'm saying is that I'm treating this as this is just a bear market bounce, one hell of a bear market bounce, and then treating it as the prices will bottom, going into the recession. Heating oil, I noticed a commitment of traders. The commercials were beginning to short this thing something fierce. They popped up. Like I said, I have to treat it as, we have a breakout and basically a retest and we're halfway back. It's one of those things that place your stops underneath here now. And, if it gets cracked, you're out. I prefer just to stand aside, for the oil. It got to 54. I'm fine. It's kind of like if oil gets to 62, we're definitely going to see something somewhere else kind of deal. Then for me, it's not as clean cut. You get to your target and it's basically mechanical, but you're just, it's kind of like, well, I'll take it. And then find another area to go after. Coffee prices, we're following this on a weekly basis. Soybeans are up, orange juice is up, coffee is South America too. This is South America stuff. Beans are higher. It's wrong time of the year for beans to be higher, so I assume it's a weather and some sort of deal in South America. Orange juice is higher. It's a South America thing. Why isn't coffee? Same thing with sugar. Brazil, South America. Okay, so we got a bounce in coffee here. I have to treat this on a weekly chart here on coffee. Prices are depressed. But I'm just assuming why, if orange juice is up and beans are up, why not coffee and say sugar? Sugar has moved up and pulled back. Have to be careful on the sugar. Let's see here. Natty gas, okay. Here we are to natty gas. Here's the overhead on this guy. We're up 6 cents today. Okay, we had a 1 day pullback. It was horizontal here. And what we had is we ran into 276 in the point and figure charts I showed. You can hear the depression in my voice here. It's kind of like Kevin when he talks about copper. All right, so it came into the 276 area, right? Okay, and that was a happy place in the point and figure chart. Okay, my deal was I really didn't like the close. We basically broke out and closed above type of deal on Friday, but we walked into it. Technically, we should have exploded to 280. At least got into the 280s. Okay, 284, 288, 288, 284 is the next happy place with that. Okay, we basically came back down to sideways. Here's the story on the overhead. You're below pivot. But if you get into the 60s, what we have is yesterday's island, okay? Yesterday, all that trading underneath would be an island, okay? You're going to be coming up into a pivot area or a linear regression line here. That is going to play some sort of overhead resistance type deal. The deal here is if we take out basically today's low. It stopped at went a penny lower than what that's how that goes. But okay, so we got to 46. All right, at the top of the shadow area. Okay, the deal is if it comes through here, it would come back down into the 30 area. The money here would probably come flying out of this thing. Because like I posted a chart yesterday in Twits, and I showed, here's where we bought at the EIA. Here's where we're at an ABC type correction. And so I kind of wrote it down as kind of an irregular one where this. Remember, I'm leaning bullish here. This is an A and a B, and this is the C part. But the deal here is you could have it where, where it's A, B, and C down here into the 30s. But this is, like I said, I walk a fine line on this one here. If by chance I wrote back and said, look, I don't like this thing. I face two things. It explodes higher, right? Okay. The money came out of it, which means that the money can go back into it. Okay. Natural gas does this kind of thing. All right. So, if I said, hey, just like before, buy in back, we got out up, what was it, 48 or something, 47, 48 on, and then it came back in on that Thursday morning, you got back in, right? Okay. Well, if you get out, you're going to have to split your money and buy either here or here, right? Okay, to support this thing. Well, now all of a sudden, if you're long down here, right, and you get the swing up and you get the swing down, you really don't have to play games with the selling and stuff. It's kind of like I have different people doing different things, onesie, twosies, and those who have some stuff that would probably do hedging by spreading or writing covered calls, that kind of thing. But if you're in down here and you move up here, if this is the bare minimum pullback, you don't want to play those games, right? You're in it down here. the most amount of pain I'd have to say would be down here. The other thing is that we're coming off a 17-year low. You have to, you know, as they say, this isn't easy. It's not like the stock market, right, where you can look at a macro cycle and say, okay, this is going to go up for at least 40 to 44 months, you know, and you index and you buy and you're on your way. That's a fact check. This is a little bit different here. You're dealing with participants who wake up in the morning and say it's cold and we should buy natural gas, because eventually there will be a time when natural gas actually clears the $4 area, and then the $5 area, and then the $6. It doesn't, like I mentioned in yesterday's video, it doesn't make sense, you know, that one day gold's at $2,000 and the next day it's half. Just because we're pulling it out of the ground, just because it doesn't make any difference. The speculators will do what the speculators do. A newbie, an 18-year-old, doesn't know that this is coming off an 18-year low, you know, a 17-year low. All they see is it can go up to 16 and then it's at 3.5, you know, so they know it can only go to 0. That's how I look at it. But it's one of these things that if we do go higher, there's a little overhead up in here, okay. The deal is that the money would have to come back in, okay. It actually came out pretty hard here. This is where they actually got out, okay. And so then we came back and the money began to come back in. If they pushed through this would be an island, and then we'd just go screaming into the 80s. This is like I said in the natural gas video. We got to get away from this area. It's not they don't call it resistance for a reason. But if we get away from this area, then there's a sigh of relief, and then you can move your stops all the way back up. Some of you got stopped out. I would just stand aside just in case we see the 30s here by chance. Okay, that kind of deal. Plus, you'd come in and support the area. There is a gap here with the contract rollover. But we're just going to assume that it's still going to, for the next 2 years, it's only going to go up. That's how I have to look at it. Okay. And then Nikkei futures, I wrote about that these were kind of lofty on here. It did follow with us. So for those of you on the West Coast, what have you, if you like to play the YM futures, the Nikkei is the same, $5 a point. It's priced weighted index. Nikkei, here was on Sunday night, precursor to oil. You had the Nikkei or the NASDAQ open at the high and trade lower. So we're playing games here. Okay. If this loses, what do we have for happy place? If this loses about, we'll say 48.60, then you're talking 48.20 and 47.70 and 47.30. And if that kind of stuff happens, I'm going to say that the S&P is in trouble and the Russell's in trouble too. We've been waiting for this to follow through, but it's just not happening. So we're back to kind of playing the same game as like 90, 97, 98, 99, where we'll say the Russell goes higher. It's taking the Dow with, but that's a different priced index. But the NASDAQ's not coming with. So, there's some sort of divergence going on here. Gasoline, happy place under here, goes along with oil. It didn't break out, as did heating oil, but it's kind of a seasonal thing. There must be a gas war going on because I paid $1.93. You can see that the money there has room to run. So, I'm not sure if you want to buy April futures on here, for running into the seasonal type of deal. Heating oil or oil can come down and the products can go up too. Sugar, it's kind of the same thing. If we can get over pivot here, 1925, 29, then we might continue the move here. Support, it would be 18. I'd begin to start warming up at 18 and 17 area if it slides into that. But be careful that, if you look at a weekly here, you know, what's this here? 18, yeah, and then the next one is 17. You know, so this is kind of like what I'm hoping for in a perfect world. But I'm treating this as a weekly. You know, 1, 2, 3, 4, 5, and then the corrective wave back in here. Kind of swipe the stops and then take off again. Silver is holding up a lot better than gold. You can see that it's not, you know, silver's moving up, and yet money's not chasing after it. So you don't have believers. So I have to still lean on the long side here. You know, like I said, you'll see it with, I think with platinum too, basically the same thing. I was looking for a $100 move. I got $50 move. Oh, how about platinum? How about you spell it right there, Kev? Same thing. You could look at this as like an ABC pattern here, and then this is a flag, and then run higher. Have to clear the 92, 94 area, and then swing. We're talking about move to $1,000 from, you know, 900 to 1,000. Like I said, you know, we've seen some, you know, the markets can move quick before, you know, it's over with. So put in your I buy here, I sell here stuff. You know, put that all in there. We could treat this as a smaller flag here on the Russell, but as you can see, it didn't swing as far. Okay, happy place here is about 1328. Losing yesterday's low, it's at pivot, then it would probably roll over here. The caution is of course, if it goes and retests all the way back down in here, then I'd look at it as a massive failure of the last 7 years. Okay, you know, it's one of those where, you know, I don't want to short it, but you know, it goes back to like VIX types products. You know, I talked in yesterday's video about was it VXZ, the midterm VIX, the middle chunk is lofty. So they're looking for some sort of shaking going on, probably, what's that, February to April area. Okay. 1 year anniversary type of thing. Bonds, here's the, you know, the money's started flowing in last night. So I'm looking for it to take out, what, 4 or 5 weeks. I'm looking for all these things to come all the way back up in here. Just clean up everybody who got involved in here. It's, you know, I'm talking about taking, you know, so 165 on these, you know, yeah, here you are, and then this would be the next spot, and then this area. But I mean, just all of a sudden, you know, if it moves like this, and these people aren't stopped out, they're like, oh well, there'll be a little bit of hope, or they'll have shorts here and shorts here, resting to short it, and all of a sudden it takes off. That's short, sharp, and quick. I mean, I talked about that a few weeks ago about bonds moving. You know, every point's $1,000 on the bonds. So, you know, caution. The Dow is the best looking chart of all of them for right now that I see, you know, from the extension and hanging on. Where's this here? 19.8. 20,000 might be one of those psychological ones where you get close and then, haha, fooled you. And we use this line here as the support line. If it's cracked, then we'll come down to this mushy area down here at 19.1. And bonds, same thing here. Kind of like buy on the evens and then sell on the odds. I would say that, you know, all of a sudden you get to, where are we at here? This is 150 and a half, 152 and 3/4. See, I'd like to see bonds come all the way back up to 155. You know, just, but Kev, they're raising rates. Yeah, I know. It's already in it. They've been able to short this thing since July, you know, right? Where am I here? Since July. Whoops. We'll skip the weekly and go to the daily. You know, they've been dumping this stuff since July. Okay. When you come down to the median line, blah, 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 it's at 150. That's 155. I said 155, didn't I? Yeah, whatever. Okay, so I'm looking for it to get up to here. Yeah, that's what it is, 155. So that's 148 was the after I've been bottom fishing over here. 150, 148 was where I said to buy the option and wouldn't write against it until you cleared 150. So 148 to 155 is 7 points or $7,000. Like I said, this is a bear market rally. You know how I hate going against the main trend. You know, yes, I was on the floor, and that's how I traded for little chunks at a time because it worked for me as a 19-year-old making, you know, what the market offered me at the time. I didn't, you know, it was 1987. I did, you know, I have the ADD thing, you know, so, you know, trying to hold on for 18 months, you know, then eventually I figured it out that when I found a bull market, I was 18 months early, but you sit on your hands as a 19-year-old with ADD and this thing's going to explode. This thing's going to explode. No, it's not, kid. It's been going down for 40 years. It's going to explode. It's going to explode. Like the 87 crash. How come you want to sell your life insurance? Well, because the stock market's going to crater. No, it's not. You know, there's nothing like being 19 and staring at a face of some guy middle-aged and telling him that there's going to be a whole world of hurt coming his way, you know. Yep. And then it goes on from there, you know, 2000, 2007, you know, so I think that's that, right? All right. I'll have to email you guys. Oh, hold on, the corn and stuff. Corn. Well, okay. So corn's at the happy place here. I'd rather lean into wheat than corn. Definitely want to short the beans. Yeah. See, these things they're not reacting to seasonal, but like I said before, we might have some sort of nefarious activities going on behind the scene where we cause an artificial shortage, which of course will then turn these interest rate characters back down something fierce. Just like, you know, the whole run up to like 78, 79, 80, we might be playing that game again. Okay, where we embargo Russia for good, and then it just, you know, we're doing little things right now. Or I guess he's doing the embargo side of Western goods, but all of a sudden you do things like where you embargo wheat, and then the whole masses get upset. So this is going to be interesting here. Here's soybean oil. The deal here with oil is that it's actually. It's part of the crush. So if people want oil, I kind of like the short side of meal more than oil per se. Soybean meal here. It's, you know, one of these things that, you know, if they want oil, they crush it, and then you have too much meal. My thing though is between all of it is to actually go after the beans. Here's the notes. So like, where am I talking? Gosh, no, it's up to 127. I guess that's 3 points. That would work. What's this? 128. So 127, 128. I know that's what I'm looking for. It's just something where I guess it would be this here. Yeah, 127. 3 points higher on here. It's just short, sharp, and quick. I'd have to say, like, for sure, you know, 25. And if we raise and these things fall lower, stocks are definitely they're gonna know. This is just a pretty hefty decline in bond prices and interest rates going higher. Soybeans, if you look at the weekly, this is the deal here. The money's in here. Okay, so there's major bets going on here. My thing is if it falls apart, where are we at here? If this thing falls apart, you're going to have a lot of unwinding. Okay. And that's what I'm basically looking for. What do we have here? ABC pattern here. All right, yeah. Well, if it's going to run higher, it should be an extension from here, an extended wave. If I just count this correct as like an ABC pattern, you can see the money come out on a 4-hour basis, but the swing would be higher here. You can see how it did it here, you know, ABC pattern and then swung, ABC pattern and swung. But they're kind of choppy. It's more like corrective in nature. But the thing that caught my attention and still does is the amount of money that's in this thing. It's loaded. So anything in South America, newsworthy bearish, I mean, it basically took off here at $9. So they're trying to swing it up to 13 here, I think is what their goal is. But if it falters, then this thing is headed to 850. And that's, watch the November 2017 contract, which I can do, of course, real quick here, right? X7. See, here we are trading above the previous high, so this would be the one I'd kind of want to go into and short up in here. And then look for it to go from $10 to $850. We'll just say $10.50 to $850 is $2. It's 10 grand. What is the margin on this thing? 1,800 bucks. Okay, so if I'm right, 1,800 for margin. You know I don't like putting in minimum, but let's just say you put in 5 grand. You short it. Say this does hold. It's short. You know, whatever, and it goes down to 850. That's $2. It's 10 grand. You know, it's $50 a point. It's penny, just like S&Ps. So I think that's that, and then I'll leave you with that, and I'll post this, and I'll let you guys go. Right? Was that the last chart? Oh no, Kevin. Here's twos. Twos came off here. All right, where's my bonds then? So twos came off. When we raise rates, it's the front end on here. Okay, so these are the ones to move. So you could have it where for spreaders, you know, short the twos and buy the tens and that, you know, that kind of deal. Because when we raise rates, it's on the front end right here, not the back end. It filters to the back end, but maybe those have moved where we pressured the twos. The yield curve begins to flatten from it, you know, that kind of thing. That's probably what we're working on. No wheat. We have to look at wheat. Of course we have to look at wheat. All right. Down here, I think it was whatever, 8.5, 9, 10. I posted it on StockTwits. Okay, so here we are. Where's the daily here? All right, so we have a large sideways pattern here. Okay, all right. A lot of bodies thought, hey, this is going to be the breakout. It didn't work. We washed them out. Friday, we kind of set in a triangle. Good going, Kev. Can you make things any more difficult? Contract rollover into March here. March comes down. Money comes out. All right, we have the little cross thing here. So you'd want to support once again at 408 3/4. Okay. That's how I'd kind of lean on this here. But once it goes above, up in here, I talked about, oh, that works perfectly. Okay, so the larger sideways, the money's coming in here. Okay, so your target on the upper end would be 62. This is on the March. 57. I talked about 48 and stuff. I think up in the lower boundaries on here. You have a little cross thing here, so they're indecisive for right now. You could have that this is more of a pause going on. You can have your little triangle thing. The deal is you know, on your shorts on the downside, it's not that far away. You know, so it's like I said, it's $50 a penny here. Where did we? Okay, so this is Tuesday. This is Monday. This is Friday, right? Yeah. Okay. All right. So this is the open on Sunday. So this is the close your eyes and buy it thing here. Oh, this is weekly. Excuse me. I'm sorry. So it's up into here. All right. So I have to treat this as a pause. The money's coming in here. So it's kind of like the beans. The deal, I was looking to try and establish a position under 4, but, you know, if the market dictates, you have to go with it. What I've seen is, you know, we have a lot of sideways here. So it's ran out of its you know, momentum of moving lower, you know, and, you know, say beans pull corn and wheat up, that kind of thing. So I'd rather go after wheat than corn. You know, to me, you know, you look at the chart and you go, well, it is pointing up, but it's not supposed to be working this type of year. That's me adding in some parlay thing. That's like natural gas. spiking in July instead of December or whatever, that kind of thing, where it's not normal. You have to that's why you just look at the chart, turn off the TV, you know. I mean, yeah, you can listen to Bloomberg and stuff, but you have to make up your own mind. What's that one? Pepsi last year above 105. Okay. Let me look at Pepsi real quick on here. Remember that eventually the dollar will get stronger again and run into problems. I'm looking on the short side of this puts on here. And then Coca-Cola, I think, is calling a top on the market in general. I looked at a yearly chart, and I'll send it this morning, on Coca-Cola, and it peaked in 98. So there you go. There you have it. Have yourself a wonderful Tuesday.